Hey guys, so this is the third installment of our video for today for stocks by request sessions. If you have not seen the first two, I posted Ayala Corp 2 hours ago, then I posted Wilcon based on the top stocks that you guys requested via social media. As you all know, you send the stocks, I analyze them. Again, this is not get rich quick, these are not stock picks. This is me giving you references on how you can trade the markets with confidence, on how you can analyze it. And that's the heart of this channel. By the way, my name is Marvin Germo. I'm a stock market trader and investor, and I've been investing in the markets for more than a decade. So if you want to learn more about the stock market, you want to learn and have the right conviction on how you can trade, super appreciate it if you could press the subscribe button and right beside it the bell so that every time I come up with videos like this, you get updated. As you all know, there's so much videos coming out in YouTube that pressing the bell allows you to be updated every time I come up with videos like this, because I just have one goal. The whole goal, the whole narrative of me creating one video a day, at least one video a day, is to give you insight and information that I get to share my ideas. And I'll never stop, guys. I'll never stop making videos like this because I just love sharing my ideas to all of you, and I just want to be part of your investment journey. So if videos like this help you, I appreciate it if you press a like, press a thumbs up so that the YouTube algorithm shows this to more and more people. Now, here's the thing. A lot of people have been, you've seen so many posts in YouTube, in the internet, talking about the US crash, talking about a global crash, talking about a global financial crisis. Though I've said this over and over in so many videos that crashes, recessions, markets dropping, it's not a question whether they will happen, it's only a question of when. And if you look at it, there was a crash in 2001, there was a crash in 2008, and the crash that's happening right now was 12 years in the making. So why am I saying this? If people are second guessing if a crash is happening, guess what, guys? We're already in it. But the biggest question is that people are saying that there's still a bigger crash that's ahead. As you know, I posted something on Facebook saying that Warren Buffett sold all of his airline stocks even at a loss, and he has a record number of cash still stockpiled with him. Why am I saying this, and what's the narrative for all of that? There's an argument that Warren Buffett is so good as an investor, but why didn't he buy when the market dropped massively? A lot of people are actually thinking that, hey, since Warren Buffett did not buy, maybe he's thinking based on this new normal, based on this new economy, based on what's possibly happening, there, the market might not be as cheap yet. Or he's thinking that based on all of this, things might be still expensive. Or the market may still drop massively. That's why he's still in cash. And if there's one thing that I do know is don't just follow what people are saying, follow where their money is going. So if Warren Buffett is not putting in money yet, there might be something that he knows more than us. But then again, everyone has their own opinion on the markets, and there's so much opinions about will it be a v-shaped recovery, will it be a w-shaped recovery, will it be a u-shaped recovery. There's one thing I do know: u-shaped, w-shaped, v-shaped, a recovery will happen. This too shall pass. Whether it drops, it's not a question whether it will drop further. It's a question of what are you doing in the midst of the drop? What are you doing in the midst of a reversal? Because here's what I know, I've seen this over and over. People don't invest. When the market is high, people are saying it's too expensive. When the market is low, people are saying it's too scary. What's more important than whatever scenarios that could possibly happen is your strategy, your plan, your narrative while all of this is unfolding. What are your signals? But now let's look at the charts. Now, since I mentioned that, where is the US market in all of this? Is a crash really happening? We're at the 4 minute mark, close to the 5 minute mark. If this is helping you, comment below. I want to know. And if you guys have also questions, put them in the comment section. I'm going to try to make videos off of this. If you are learning, I'd appreciate it put it in the comment section. I'm learning. Now, this is a chart from the 1990s. So the earliest that I have here is around 1995. Since we are at the 2020 mark, this is a 25-year chart. Now, I want to measure this. As you can see, this is one of the highest points. This is the dot-com crash. After the dot-com crash, you saw it to its lowest go down 39%. But from 1995, I want to show this to you. The market from that time on went up 235%. So please take note of this. 1995 to the dot-com crash, 235% upside. Then it started to top off. It started to build the resistance here. As it started to build the resistance here, then eventually it broke the moving averages, it broke the support, then it formed a downtrend. The downside was 39%. After that, markets recovered. As it started to recover, remember what I said, it doesn't matter if it's a U-shaped reversal, it doesn't matter if it's a W-shaped reversal, it doesn't matter if it's a V-shaped reversal. The fact of the matter is there will be a reversal, and that's what matters the most. That being said, as it started to reverse, the upside was 103%. Then after that, boom, 2008 financial crisis, it brought the markets down at least 53.6%. By now, I hope you're seeing a trend here. Yeah, I'm not sure if you're getting what I'm trying to say, but it's this. I said that drops are cyclical, recessions are cyclical, so are upward movements. Upward movements are cyclical, reversals are cyclical. But here's the thing, and here's what I want to drive in for all of you, especially if you're a long term investor. Look at this. The market dropped 39%. But prior to that, it went up 235.7%. Then after dropping 39%, it went up 103.9%. Now look at this. Regardless of where you look at it, the markets, after going up 103.9%, it dropped 53.6%. So what's the context of this? Where the drops will be scary. The drops may be big, but the movements up will be more exciting. The movements up will be higher. Why? After that, after the drop, after it fall, look at this. Rally from 2008 all the way up to the peak at some point late last year, early this year, 340 plus percent. You get what I'm trying to say? Drops happen. They're part of the game. But if you're long term in the market, you have a proper perspective. Crashes like this should not destroy you. Crashes like this, if you know what you're getting into, should define wealth for you for a stretch period of time. That's why I've been saying this over and over. You panic, you lose. But when you look at it from a long term perspective, that's when you win. Warren Buffett said it well. You investing in the US market is you banking on that the world will continue. It's you banking on that what those companies in the US S&P 500, for this one it's the Dow Jones, will still work, that the US economy will still be one of the biggest economies in the world. So that's what an investment in the Dow Jones Industrial Average is. That's an investment also in the S&P 500. You are actually believing that the US economy is here to stay, that there might be threats, there might be movements like this, there might be recessions. But if there's one thing that I do know, especially if you're just tracking the index, indices drop, but they always go back higher than where they were before. And since, similar to the Philippine Stock Exchange Index, the stocks inside those indices get recalibrated, there will come a point in time where, stocks that were there in the 90s may not be the stocks that are here now. If you look at the large indices, you will see that in the 90s, the large cap, the large weight in those indices were oil stocks, petroleum stocks. Now, the technology stocks. So what do I mean by this? It evolves, it shifts, it changes. That they may drop, but because It's a basket of stocks. The ones that aren't doing so well will be taken out and they'll be replaced by ones that are more relevant to the times. Now, from a trend perspective, you will also see this. Uptrend. Uptrend got broken, then it started to go down here. Then you have another massive uptrend here. Then it started to go down steeply because of the 2008 crash. Now, this is what we've been talking about, the very, very long and strong, massive uptrend. So if you look at it from that level, allow me to zoom in so you see it properly. That long-term uptrend got broken here. But if you try to analyze it, it bounced back. And that's what makes it so interesting. Even if you try to plot it from this level here, the shorter and smaller uptrend that started 2016, if you look at it from that perspective, by the way, this is not the main one, but I just want to reiterate something. Even if you connect this here, the main long-term uptrend from the drop, we went back. And now this is where we are. One of the reasons why it's not going up right now is because, as you can see, it's hitting a resistance here. It really hasn't broke past the 200-day moving average. But one thing is for sure, one thing I know is true. Once it started to hit the 18,000 level, people started buying. It started to bounce. So if there's a couple of things that we can know is this. Number one, no one knows how low will this go. No one knows if 18,522 is the bottom. No one knows that after this point in time, it's going to go down again. No one knows if after this point in time, it's going to continue to rally up. But there's one thing that I do know. It's about following what the charts are telling us. And one thing I do know is this. It bounced back from the 18,500 level. It's way back again from the long-term uptrend. MACD is saying it's above zero, it's bullish. Looking at it also, one of the reasons why it's experiencing some hard times, try to go up, hit this level, bounce back because it hit the 20-day moving average, but while doing so, it broke past the 50-day moving average. Then why did it go down? Because of this blockage from the 2016 uptrend. Now, please remember the 2016 uptrend that's blocking it is now the new resistance. So it needs to break out from this for it to go back to its long-term trajectory as well. But if you're looking at it from the main uptrend that started in 2008, the uptrend is already back. But again, they're selling because, as what I've shown you on the previous videos that I created, because of that, it's already up 30+%. Who would not want to take profits when there's still uncertainty for the coronavirus? Please remember, while this video is being uploaded now, there's still no cure. There's still no vaccine. So that means there's still uncertainty. If you are up 36.1% and you place billions of dollars, you place multi-millions of dollars, who would not be tempted to take profits given that there's still a lot of uncertainty? And given that, looking at the charts, it's close to the resistance. People sell at the resistance. And that's what I'm saying. So if markets next week go down, or markets next week start to consolidate, and a possible consolidation level could be this, it's primarily because we're at the resistance. Short-term consolidation level, 2,342, support. Short-term consolidation level, resistance 24543. Support 23422, resistance 24543. Bounce from 23422 level, it will try to attack the resistance at the 2453 level, 24,543 level. Break out from that, then suddenly we are back again in the 2016 uptrend, and now it will make its shot to attack and break past this resistance level. So, what's gonna happen? Bounce from 23422, it will attack 24543, breaks out from that, it will challenge the 25,931 resistance level. But a lot of the indicators now, with the exception of the 100-day and 200-day moving average, majority of them are bullish. So, why am I saying this? If you notice it also, a lot of people, you watch Bloomberg, they would normally say from the highest point, which was February 2020, to the lowest point, if it hits 20+%, they're saying that it's in a bear market. So the bear market was somewhere here. Yes, but here's the thing. Drop down, surpass the bear market. Then after that, if you look at and measure this, hey, It's way past the 20+% mark. It's way above this measuring point. Meaning, from that metric, we're not bearish anymore. So one thing that I'd like you to watch out for is this. I believe that the market won't crash further if these two support levels will hold. Number one, 23,422, and the long-term uptrend, which is this particular line. So if the long-term uptrend holds and the 23,422 level holds, we may see the market, regardless of news, regardless of what's happening, we may see it either consolidate and move to this support and resistance levels that I pointed out, or if there's enough buying power. And please do note this: there's a lot of things happening in America uh, from a business perspective, from what's happening in the real economy. There's over 20 plus million Americans that lost jobs, and that's real. That's true. That's gonna hurt the economy. However, the US is giving out cash like crazy, giving out bailouts, giving out money to companies, giving out loans, giving out relief packages to people who don't have jobs. So the reason why I'm saying this is, as long as they're printing money, as long as they're protecting their economy from a credit crunch, as long as there's a lot of money in the banks that are around, they wouldn't be scared. And as long as the US government, the US Fed keeps on buying those bonds, keeps on buying those securities by the money that they've printed, there's still a sense of normalcy that life will continue to go on and spending will continue to go on. And if that's the narrative, then guess what? They have a shot. They're thinking that what happened in 2008, they can cue it themselves out again. Will that work? Let's see how history would unfold. But as a stock market trader, what I do know, support is 23422. Resistance, main trend line is this. And the reason why it's not going up, it's getting blocked by the 24543 resistance level. And to my Filipino audience, here's the thing. If you notice it, the same technique, the same tools for analyzing your charts in the Philippines is the same way you get to analyze the US markets. And that's how powerful technical analysis is. I hope you guys are getting this. This is not stock tips, but this is me giving logic, giving insight so that you can trade with confidence, so you can analyze with confidence, because I want my YouTube channel to be a channel that educates people. And not even for me to say that I'm the best, I'm amazing. I'm not there for that. I'm here just to help as much people as possible. And because I know that we need more people to help. This generation needs more sources of income. And I want you guys, the reason why you're investing in the stock market is I believe you have extra. And if you make more, you can invest more. If you make more, you get to give more. And that's the heart, that's the crux of this. I want you guys to make as much as you can, because it's time for good people to make money. It's time for good people like you guys listening to create an impact here when everyone's fighting. There's so much political turmoil, there's so much opinions, there's so much people trying to bring other people down. Please remember this. People who are down, just bring people down. People who are up like you. Your goal is to bring other people up. Take people up. Bring them higher. Teach them. Educate them. Take them up. And I hope that you earn as much. You earn a lot. Because as you earn as much and you earn a lot, you get to be a blessing to a lot of people. And I hope this video helps you. And I hope that this pushes you to reach for your dreams, because I really believe this. Amidst the volatility, the stock market is still one of the greatest assets, greatest investments out there if you study and you know what you're getting into. So there, just a quick plug. I have two YouTube channels, this one and my second YouTube channel, Marvin Germo Podcast. I appreciate it, guys, if you can support that. It's new, but I hope that it really touches a lot of lives, and I hope it really helps change the narrative of how Filipinos invest and save their money. For those who want to read my books, I have 5 books. They're all on Shopee. They can be delivered wherever you are in the Philippines. For those who want to learn deeper, go deeper, take a deep dive in this, I have 3 online courses. One, they're all in the description below. One is next week. It's a Zoom call. It's a Zoom online conference. The two other ones are Make Money, Grow Money. It's entrepreneurship, investing, and the stock market with Sean Si. And the other one is a Tagalog stock market course with Chinkee Tan called Stock Market for Everyone. I hope you guys got a lot from this. We're at the 20-minute mark. Comment below if you stayed up until the 20-minute mark. I'm pouring a lot. I'm giving the finest minutes, hours, portions of my life to just educate people, to just give you enough, to just so that you guys can win, so you guys have a shot, so you guys can leverage what you have, so you guys can use this lockdown for you to build your skills. And I hope you get as much as you can. I hope you learn. I hope that you get the principles here. Because as you all know, investing is a process. It's not something that you'll earn quickly. It's something that you have to learn. And I hope you love the journey, that you love the process, that you disregard the noise, that you don't care what other people say, that you run your own race, that you push hard, that you push strong, that you do what you can. Because in every crisis, there is always an opportunity for you to earn. Stop looking at the loss. Start looking at what's right. Start looking on how you can make things better. That's it for now. This is Marvin Germo. I hope this video helps you. Trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.